Welcome to the morning macro report. We got a very sharp signal, very risk on sharp signal from the macros, from the macro forces. And here we go, looking up at the top, right? Let me see if I can bring this up. Oh, there we go. Okay, we just got a little freeze. Hold on, we're having some technical difficulty here. All right, there we go. So this is the signal. This is the big signal. I want to put this in the side view. Hold on. Getting some issues here with StreamYard. There we go. So this is the macro signal that we're getting. We've been looking at this for the last 6 months, right? This is the risk on signal. And anybody want to guess what it is? What is this? What are we looking at here? Good morning, D-Maj. How you doing this morning? Nice morning. Risk on signal. This is the US dollar. The US dollar is finally starting to break down. I got the monthly chart up here, but let's look at the weekly chart, right? We're starting to get that breakdown. We tested it a couple times earlier in the year. Now it's starting to break down. And the question is, what is getting us down here? I think we are now finally starting to get the risk on signal because we're getting significant misses. Well, not misses on inflation, but you're now starting to get meaningful downside inflation. All right. We saw CPI yesterday, basically near 2%, right? We're at 3% flat headline CPI, and we are focused on the headline, and we're there now. So the next question is, what about PPI, right? Producer prices, because we're headed into earnings season. We are headed into earnings season, and what we're seeing is that producer prices are year over year are almost negative. They're almost negative. So inflation is evaporating, right? Inflation risks at least are starting to evaporate. This is the year on year producer price index. Let's look at it in a line chart, right? Look at that. Okay, let's zoom in there. Zoom in there. Look at our producer prices. They're basically zero, right? And what are producer prices? What exactly do we mean by producer prices? The cost of doing business, right? The cost for producers. And this is going to pump EPS. We're headed into earnings season, and this creates a tailwind, right? This creates a tailwind for earnings per share, for revenues, whatever you want to call it. Not for consumers. Consumers still have some stickier inflation, but for producers on the other side, right? Especially manufacturing, where we're in recession territory, it kind of gives us a bounce, and I think we can recover. So that's a year on year. Obviously, you know, that's not everything. There's also the PPI month over month, which some will say is more important, but we're at 0.1. If you annualize that 0.1, you know what, we're in 1.5 inflation, 1.5% inflation for the producers. Okay, remember, this is all about producer prices, right? This is PPI. So this is all about earnings season, right? How does this translate into earnings, which not the economy, because everybody gets mixed up, not the economy. We're looking at the stock market, who's looking much further ahead, right? The stock market's looking much further ahead. And what we are seeing is, if we look at core, we're at 2.4% inflation, right? We're going lower. So inflation risks are starting to evaporate. And that's why we're starting to see the dollar finally start to break down. Okay. On the other hand, why is this happening? Let's keep our eye on this, because 10-year bond yields are seeing that inflation risks are evaporating, and now the cost of capital is coming down, right? The risk of more hikes is starting to evaporate also. We have the market is pricing in one more hike in, the market is pricing in one more hike in July, but now the second hike that the Fed has tried to signal, I think is just not there, because we're seeing the inflation risks, like I said, evaporate. We're at almost negative on producer prices, and we're near 2% target on the Fed. So looking forward, just expectation wise, right? Expectation wise, we are basically, the inflation risks are evaporating expectation wise. And so we're seeing the 10-year bond yields come down, the cost of capital, we're seeing the dollar start to break down. That's going to help global trade, also the cost of trade. And, you know, the biggest risk really is oil. We're still looking at oil as being that risk. Can it get above? It's above 75. So now oil is, posing as a risk that should also keep inflation a little stickier, because it is energy, which is the biggest component. We all know shelter is going to come through weaker than expected, and we got to keep our eye out on that. Now, what does that mean? Next is there's a bid in bonds. Well, forget the bid in bonds, right? Let's go to the VIX. Volatility. What are we seeing in volatility? Volatility is about to make new lows. We're seeing the VIX start to make new lows. Is it there yet? No. But bro, it's at 13. It's at 13. It's near 12. I think this morning it almost touched 12. So volatility is coming off the table, right? Insurance against the equity market is coming off the table because the inflation risks are evaporating. 10-year bond yields are cost of capital, interest rates, the real interest rates to the market coming down, dollar risk on, right? The trend of the VIX is also breaking two new lows. All right, now we go to volatility for the actual NASDAQ, right? Tech stock volatility coming lower. Bond volatility, big downside risk, right? After that inflation report, bond volatility is coming down because the risks for inflation are not rising. Although the economy is staying in there and we're stronger than expected, the risks are definitely not climbing. They're coming down. This is very positive. Plus, we already know, from FactSet the other day, we got the report from FactSet here. Where is it? FactSet. Here it is. Highest companies. You can't really see this, but the highest number of S&P 500 companies issuing positive earnings per share, positive EPS guidance. So this is the highest issuance of positive EPS since Q3 of 2021, right? And so we're starting to climb. We are starting to climb in expectations anyway. And hey, if we get a black swan, we're going lower, but I don't see the black swan. Nobody sees the black swan, right? So can't really factor that in. But for the most part, right, it is what it is, and the risks are coming off the table. You heard it here first. Maybe some other people are still bullish, but we are looking at all this stuff. Let's go to credit risk, right? Credit risk, triple B spreads, which is bond debt. It's still coming lower. The triple B spread is coming lower, and this is a signal that there's still risk taking in the equity market, right? Let's just talk about the equity market. This is junk bonds in general. They're going higher. Junk bonds are high yield bonds. So there is bid, there's risk happening. Is it really strong? No, it isn't really strong, but it is higher than it was back in September of 2022. So, we're still in the risk on regime. We're getting the Qs breakout right now. Keep in mind a couple things. I am swing trading Roku. We'll get into that, and I will get to your question, Dimaj. We'll jump to your question. Just want to finish off on the macros. All right, I want to finish off on the macros. Really got to get used to this. Okay, there we go. That's why it looks so weird. So those are junk bonds, okay? S&P 500, where we at? We're breaking out. We are breaking out, headed for all-time highs. Yes, I am bullish. Yes, I am more bullish than some people, okay? And I'm calling for all-time highs this year. So far, that's what I'm seeing. When I look at everything, the risk on trade is starting. People are still stuck in cash. Inflation expectations, inflation risks are evaporating, okay? And we have a lot of good stuff in the pipeline. Those PPI numbers near zero tell me that earnings growth is going to be better than expected. We're troughing. We're starting to bottom in earnings. Not all companies. The best will survive. But for the most part, we're going higher. Okay. QQQ headed for all-time highs. We're breaking out as we speak. Dow, and this is market breadth. Dow is still stuck, but it is still above, right? We're 6% from the highs. IWM breaking hard to the upside, right? That's a big candle for IWM. There's other ways to look at it, but small caps are moving. RSP, right? Or I should have ARK on here, but we have market breadth coming in, bro. I mean, take a look at this. This is, what is RSP? This is the equal weight S&P, right? So if you don't like equal weight, if you don't like the S&P 500, there's only so many stocks moving the market. Well, this is the equal weighted average, and it's breaking out, right? We are now starting to break. We're above a lot of the moving averages. And very bullish signal, especially with the dollar. Keep that in mind. The dollar is breaking down. That's the biggest risk on signal that tells us in real time that risk is coming out of, cash is starting to get reinvested. And because those inflation risks are purely just starting to fall, right? Crypto hasn't moved yet. We're still waiting. We're consolidating, right? But keep your eye on Bitcoin, because we're going to get the God candle pretty soon. We're going to get that God candle right straight to 30. I think once we break over 32K, we run to 37, mark my words, 36, 37K. I think we get a big God candle. You know what those look like. You saw it on Palantir back in the day, right? This is a God candle on Palantir. If we go to the monthly, this is it. You just get that gigantic group, right? It's a monthly candle, weekly candle, whatever. Yeah, it's a little, it's a little I'm a little overly zealous. But when I see these signals start to take place, right, the dollar is starting to break down, inflation risks are coming down, PPI is at negative, PPI is near negative, headline CPI is basically at the Fed's target. You can wait till they actually get there, but these are front run signals. These are signals that are telling us, hey, we're still in the bull market. 10-year yields may have peaked, and we'll keep our eye on that. Big risk being oil. Okay, we are still a little worried about this oil price because it does signal further inflation into the future. Gas prices, XYZ. So we'll keep our eye on that. And that's our biggest risk right now is oil. So jumping into the questions and jumping into the market, I am keeping my eye, like I said, on AMD, Roku, Tesla. We can go into those positions. Good morning. How you guys doing? So here we got Dimaj. Do you think Amazon will break that channel today? It's been consolidating very tightly around 131.50. Let's check out Amazon. Let's switch over to, let's see what we're looking at here with Amazon. It's been, let me move the mic back too. I know we had a lot of feedback on the live. You guys let me know if my sound is off a little bit. All right, so here we go. Amazon, taking a look at Amazon. Okay, and keep in mind, guys, dude, the inflation risks are evaporating. They are starting to evaporate, and a lot of people are going to be scared to say that, right? They have all their reasons to be. Also, shout out to oh man, I can't remember his name, but shout out to the dude. Actually, I'll announce that later. We might have a good announcement later, and we'll wait on that. Amazon, okay, AMD is getting pushed back. So Dimaj, Amazon will break that channel today. It's been consolidating very tight, 131.50. Let's see. It did gap above the channel, right? We are above the 131 channel. We're in that next resistance zone for Amazon. Charts on Bluetooth. Gotta call it Bluetooth for you guys. Charts on Bluetooth. We are in that channel. So the gap up on Amazon, low key. Well, not low key, but the gap up on Amazon is very bullish signal. But the overall market is also breaking up, right? On this new PPI report. Remember, yesterday was inflation. I said we might consolidate. We're gonna get excited. We're gonna sell off. We're gonna find support. But tomorrow, which is today, will solidify the expectations for inflation. PPI is 0. PPI leads consumer prices, and we are, we're headed lower for inflation. Inflation is evaporating. So the next risks on the table are really going to be those in recession risks. It has to be the recession risks, because inflation, where is it? It's non-existent. We're not getting inflation risks rise. And I'm not talking about the absolute level. I'm not talking about, oh my God, the cost of lotion is $7. It is prices are no longer going up. That is inflation. That is the stock market, not the economy. The stock market is not the economy. They're correlated, but the stock market's looking a lot further ahead. And when we look at stocks are going to rise. As inflation comes down, that pumps earnings, right? That gives you earning strength because that interest rate haircut is pretty much done. So Dimaj, yeah, we're above the 133 level. If we go like intraday, looks like we did gap above. So I would look for Amazon to break over this level, right? Just in the current trend, and we'll flip back. We'll flip over to the actual trader setup. We'll flip to the trader setup in a second. But yeah, once we break this trend, I don't know where VWAP's at. I don't really have all my stuff up. Looks like we're holding that 9 EMA. But yeah, strong gap up for Amazon. I think Amazon is in play. It's just been a slow grinder. Lately, it's been grinding pretty slowly. And but I think Amazon has a lot of juice, right? Look at this trend. We've seen this multiple times on Amazon. Let me take this off. Let me zoom in here. Watch. I'm gonna change this chart on YouTube over to this side so you guys can see. Right. Amazon is definitely, it definitely shows this price action a lot. You get this descending wedge or channel, right? Breaks up. Okay. Breaks out. You get it again here, right? Trends lower, breaks out. Trends lower, breaks out. We're getting that now. It's going to trend lower, find support. If it keeps holding that support, we should see the breakout to the upside for Amazon. But what you do need is the overall market in your favor. Okay. So do we have that? We have the Qs. The Qs are breaking to new highs. The S&P is breaking to new highs. This is very bullish. This is very bullish. I think people are downplaying it. This is extremely bullish signals before anybody says anything, because we are headed into earnings season, and we do have the banking report tomorrow. Now, I think banks, I think the banking reports, the regional banks are going to look very poor, because that banking crisis happened in Q1. So that's going to transfer, or that's going to translate into the earnings for this year. And if we do look at this FactSet data, one key thing here is, all right, taking a look here. This is a number of companies in for Q2, negative EPS versus positive. Green is positive, red is negative. So everybody's going to have a little negative, a little positive, because we're in this, rolling recession, or, pockets of strength, pockets of weakness. But what we do see here is there's a couple sectors who are just negative. There is no positive revision, or there's no positive issuance. Utilities, telecom services, and financial. So financials should be weak coming into this year. Financials should be pretty weak. This is financials right here, and we get banking starting tomorrow. So we'll see how that actually plays out. That's the expectation. So it'll be a little shaky, but for the most part, as the market starts to price in all the macro news, and what else we have, the fundamentals, I think we're going to be in good shape. IWM is also starting to break out. So I see a lot of good things. ARK Invest, I think, is also breaking again, which should bring up that Zoom, should push Zoom a little higher. So yeah, ARK broke out yesterday. Well, a couple days ago, pulled back yesterday, making new highs again. See any other questions there? Good morning, Slime Z. What up? What up? What up? So yeah, things are looking pretty straight, right? The economy is still, strong. I know a lot of people are negative on the economy, and maybe that does happen. We are slowing down, but I just, for the most part, there's a lot of reasons that the macro cycle is turning up. The business cycle is starting to turn up. Services are still strong. Manufacturing is weak, but we see some signals that manufacturing could be starting to recover. Now, jobless claims, right over these are jobless claims. The reason I point this out is this is more evidence that they're starting to slow down a little bit. I still think they remain elevated because we have some room to fall, but the fact that they're not spiking higher in June just tells us that the labor market remains strong. It is weak, but then if somebody loses their job, they're finding a job somewhere else, because we have elevated job openings. Okay. Back to the charts. What else were we looking at here? Consumer price inflation. Yeah, where's that PPI at? PPI, consumer shelter. This is what we really need to fall, is shelter prices, right? Shelter prices are starting to roll over barely, but these are lagging. So those collapse, CPI goes down. It's going to be too late by then. We're going to be at all-time highs by the time you actually get a good signal for shelter. I think we're going to be at all-time highs at that point. All right, so let's switch over to the trader charts. Trading charts. Yeah, you're welcome, Dimaj. And yeah, let's look at Amazon on here. I am watching AMD. I'm watching Roku. I am long Roku now, and I'm long AMD. Roku supporting this signal, not the signal, but Roku had that big gap up. And remember, Roku's it's in the ARK index. It is a risk asset. They got an upgrade the other day, and I'm looking to swing trade. Okay, I'm looking to swing trade this. You guys know I like to swing trade. I'm not a big day trader for specific reasons. I don't think I have the platform to even day trade right now. And if I do day trade, I can't bring as much content because I'll be fully concentrated, right? But I can swing trade. So we did get that big gap up for Roku. It is holding the $75 level, right? It's holding this level. It's holding this previous resistance, turning it into support. We pulled back yesterday. I got in down here because, I'm just scaling in. I'm not fully in. And then this morning we came back, we retested, and we held, right? I should have actually added here. I should have added to this position. Now I will wait for the Qs to gap up or to break out before I do add. And so there's different ways I could add. And if you guys do hear me add, you're going to hear this signal. You're going to hear this right here. right? You're gonna hear that order filled if I do decide to add. Well, it's usually a day trading thing, but either way, you guys will hear that. Now, shout out to the chat. Thanks for you guys who are joining. We are in a big, if you're just getting here, big risk on signal. We're seeing a huge risk on signal, right? Big risk on signal. The dollar is collapsing. Bond yields look like they have peaked out. We could be wrong there, but inflation did come in. Remember, I said, yes, bond yields will continue to climb because of that labor market report the other day, but it is really about inflation. It is all about inflation. Now we're here, and what's happening? Inflation is collapsing. It is evaporating. For the future, it is evaporating. I mean, it is evaporating, man. The trend is going lower. It's not going to revamp unless we get that oil really start to break out. But still, most of the other components are much lower and falling. So big risk on signal. Bond yields coming down. Triple B spread straight. There's no credit risk. It's a great environment right now. As we exit the recession risks, as we exit the if you really are bearish, you got to be betting on a black swan event. You really have to be betting on a black swan event. There's no credit risk because we don't see that happening. Number two, I mean, there's always credit risk, but they're not, you could ride this wave all the way to all-time highs and say there's still credit risk until they actually play themselves out, right? And also the the Fed has been stepping in with their bank term funding program. There's no TGA rate refill risk either. That's gone because we know it's coming from the reverse repo. All right, so Qs are pulling back. This might be where I start to add on Roku. But I am looking at AMD too. I want to see if AMD can hold above this level. If we start dropping to 114, I'm going to actually get out of this position. I'm just trying to find a swing trade. I'm just trying to add to my swing trade to get a little higher there, get up. See what we got going on. So yeah, that's what we're looking at in the pipeline right now. Okay. We have, oh yeah, we don't even have, I don't even have SPY up. Hold on, let me get, oh yeah, yes, I do. Wait a minute, what was there earlier? Was it Dow? Okay, I took the Dow off and I have SPY. SPY is, yeah, let's look at the overall market. What are we looking like here? What are we looking at for S&P 500? All right. All right, let's look at that daily chart. We are gapping up again. We're gapping up again. Look at this gap up. We're just two gap ups. One, two. Could we come back down and fill the gap? Yes, sure. Yes, we could. We could definitely come back down, fill that gap. I'm going to widen this a bit because we are focused on the S&P really quick. And the reason why is because it is the equity leader. The S&P 500 is your barometer for equities in general. Top 500 companies. QQQ is going to be your technology sector. Which really they're almost similar. It's just Qs are a little more, based in technology. So we're getting that gap up on the S&P. Now, keep in mind, last time we broke a significant level, right? Where was this? It was 420. Last time we broke 420, we got above 420, right? And it kind of looks similar if you look at it. We had three tests, 1, 2, 3. We broke out, we gapped up, and then we consolidated for what, 4 or 5 days, and then we started to move up again. So we just had a gap up. We got above that level. We might consolidate for a couple of days. I think next week we really start to get that FOMO. But as we keep gapping up, who would have thought S&P at 45? I mean, I'm sorry, 40. Yeah, 4,500. We're at 448. We're basically at 4,500. Who would have thought that? The bears are just continue to be wrong. Right now, they're starting to change their estimates. I've seen a couple guys on Instagram, on TikTok are saying, okay, well, you know what? The S&P is going to run all-time highs and get crushed and go back to the lows. Nope. Okay, that was late. But it's just like, bro, I don't think so. How are you going to change your estimate? All of a sudden, we're going to the 3,500 level, and then 3,800. Now it's 4,000. So they keep revising because, like I said in the last video, as the data comes in, it's surprising to the upside, right? Everybody's positioned to the downside. Not everybody, but I think the consensus is still recession. What for sure the consensus is not all in, right? That is for sure the consensus. Maybe not everybody short. Maybe not everybody is completely short the market or bearish, but they are not all in for sure. So to think that the surprises continue to the upside and we're just going to go all the way to the highs and then we're going to sell back off, and go back to the lows or go back to 4,000 for what? That doesn't make no sense. What are we going to? You got to have a real reason why. What is your actual reason for coming down lower? I don't see it. It has to be a black swan event. Either way, the point is the dollar is now breaking down. We're starting to get the dollar breakdown, and that is going to move. That is going to keep the things higher. Now, another reason is we're nearing the end of QT, right? We're getting to the end of QT. I'd even argue QT is starting to turn. It's at the end because the Fed is on pause now with this great inflation data. What does that also do? The great inflation data basically points to the Fed slowing down, which is why we see bond yields start to reverse and start to peak out. Okay. We're not getting inflation from the supply side. We're not seeing inflation come in for, manufacturing, services, activity. We're not seeing inflation in wages. It is a little sticky, but they're still pointed lower. Wage growth is not happening. Why would the Fed, the Fed might hike? The market is already pricing that in. So the Fed hikes because why? Because they have to keep up with expectations, right? They got to sustain their credibility, but they really don't have no reason to keep hiking. Maybe I'm wrong. Maybe they do keep hiking. Maybe they can do it, but that tells me that they're very confident that the economy is not going to collapse because they can just keep hiking. Those base effects will come in later with the hikes. But for the most part, yeah, maybe it causes the market to pull back, but we're already at all-time highs and we're in the uptrend. We are in a bull market right now, right? So next stop for the S&P, let's go to that weekly chart. The next stop for the S&P or the next resistance is, I'd say there's a hard resistance at, I guess you could just say 4,500 is that next resistance, even though SPX might look a little different than SPY. So let me just mark this S&P 500. Let's go here. And then let's go 46. Yeah, we might as well just hit the big numbers, the whole numbers. There's no perfect. SPX is going to look a little different. Let's check out SPX. Where's the next resistance? And we're at the top of the trend. We are at the top of this uptrend for SPX. You see how we blew past that level down here, that 42. Actually, it's down here, the 4,200 level. We've been talking about this for so long. Got past that level, got past 43, pushing up even stronger because nobody expected inflation to really fall this fast. They really didn't. We did. We said by the end of the summer, right? By the end of the summer, we should see inflation in the twos, right? Headline inflation in the 2 percentiles. And we should be seeing that. Next print, we should see 2% inflation. Not too flat, but 2 something, right? Also, the month-on-month core was at 1%, was at 0.1. So the month-on-month core was extremely low. And that will all be in the inflation report this Saturday. We'll have that in the macro report this Saturday. All right, so it looks like SPX, the next resistance is about 45.5, 45.5, and then we got 46.33. So I'm gonna check these out. I'm gonna keep these up. Maybe we move sideways. This is a strong move though by the S&P 500, right? I want to look a little. Let's do some more macro. I want to look at the macro indicators. We're so far ahead in this market, right? Honestly, it looks like we do need to pull back, but it doesn't mean we have to. It's just maybe we move sideways, but I think individual stocks really start to boom as the index is extremely elevated. I think indie stocks start to boom. Now, let's go to the quarterly moving averages. We're headed into earnings season though. Keep that in mind. We're heading into earnings season, and this will be another catalyst. Possibly we get some downside today because of we're looking at banks. All right, so we're pulling in. Oh, that is perfect. That is perfect. On the daily chart, these are the quarterly moving averages, right? The 13, the 26, and the is it the 42? 13, 26, 42 moving averages. We are finding support on the what did I say? The 14th? Man, I'm confused now. We're finding support on that. I think it's 12 or 14. I can't even think right now. Either way, we are finding support on that moving average, right? The quarterly, the last quarter of earnings. That's what this moving average is on the daily chart. Actually, that's not accurate. We have to go to the weekly to actually see that. But either way, we are on the daily, so we have to look for areas of support on the moving averages. We need to see areas of support on the moving averages where we see consistency. We're just too far ahead on the 50, the 100, the 200, we're way ahead of that. So we need a zone, which is why I said we might have to go to the 4-hour chart to see more actual support. All right, let's go to the weekly. And on the weekly, we're way ahead on the weekly. Yeah, we might have to do the 4-hour. We might have to do the 4-hour. We know the daily works for those quarterly moving averages, so the daily does definitely work. We'll have to do the 4-hour, and then we'll have to switch to the we'll switch to the macro on the 4-hour. See what that looks like. So on the 4-hour chart, we are finding support. This is a little clear. This is a little more clear. On the 4-hour chart, we're getting the 50 moving average as support on the 4-hour. So we'll keep our eye on that. I think we talked about this yesterday for the overall index in general, right? For their overall index. And then we can also look at that on other charts, on some other stuff. Tesla looks like it's starting to fall a little bit. AMD starting to roll over. Is it making new lows? Let me double check that. I might have to exit my position there on AMD because we are running into resistance. We're pulling back. Let's see. Making new lows. Oh yeah, we're starting to roll over. So if you're on TikTok, the screen's gonna freeze a little bit. I need to go exit my position. Actually, no, I don't have to do it on here. I'm tripping. I can do that on my screen. I have it pulled up. So we won't have to do that. So yeah, anything else you guys want to look at while we're here? Okay, so you got the VIX down at the lower hand right. Check out the VIX almost at 12. I think this morning it got down at 13.12. We almost hit 12 on the VIX. So the VIX is trending lower. Like we said, volatility is coming down. Oh wow, that's a really sharp pullback. I mean, very sharp trend. Now Roku is holding on here, so that's positive. Okay, S&P got it back above VWAP, so that's good. Advanced decline at 1300, still pretty strong. Now overall, AMD is still holding the uptrend, so I got to keep that in mind too. So we're still in the uptrend, right? It's a little oversold on the. See, what does the 15 look like? We're about an hour into the market. We might just bounce here. We'll keep that in mind. All right. Oh, there we go. SPY. You can see the SPY on the left-hand side. SPY is starting to move up now. AMD is very weak though, and what it was is for AMD this morning, who is Edgewater Research has a negative call out on AMD. Said that Microsoft is pushing out AMD, one of their chips, due to performance challenge. But just yesterday, who knows if that's FUD, just yesterday, AMD's chips, somebody said, I think it was Barron's, that AMD's chips could be a multi-billion-dollar opportunity. So who knows what's going on there? A lot of FUD. Maybe their chips aren't good. Who knows? We don't know exactly. So let's keep our eye on that. Now, let me see. Okay, good. So now jumping over, I'll keep those up. I'll keep those up there. What do we got tomorrow coming in? Tomorrow we have earnings starting tomorrow. For the actual data, we have more prices. We have import prices, export prices. We have Michigan expectations for inflation, expectations for consumers. And I think that data comes out even better. We know the inflation expectations are falling. We know that is happening now. So we have something to look forward to. We definitely have something to look forward to. Okay. Also there's a lot of charts that suggest, Tesla. Okay. There's a lot of charts that suggest, also that, there's a lot of charts that suggest that breadth is really starting to pick up in industrials, right? Industrials and consumer discretionary stock. So Tesla, Amazon are those leaders, but there's others out there. Let's see exactly who are those. So when we talk about consumer, I think those are going to be cyclicals. If we look at cyclicals, right, those are going to be cyclical stocks are going to be Amazon, Tesla, Home Depot, and Home Depot too, because the housing market is starting to bounce. Autos, McDonald's, Nike, Lowe's, consumers are spending, and and I think that's why you see the cyclical starting to pick up. because it was supposed to be the season for weakness, but we're not getting that. We're getting a season of strength. We're actually getting a season of strength. Good morning, Ace. How you doing? Shout out, Ace. What are you looking at? What are you checking out here on the market? Obviously, we went over a little bit of the macro, Ace. Dollar breaking down, yields peaking out. I think it's extreme risk on following the inflation report. Extreme risk on, right? It doesn't mean like, oh my God, you need to go all in. But for the macro, it turns slow and then it all comes at once. We're gapping also above previous 52-week highs. So on the Qs and in the Qs and in the NASDAQ. So, I mean, we'll look back and say, wow, that was a good signal, right? The dollar breaking down is a huge signal. So anyways, we're looking at consumer cyclicals, Airbnb. Well, I don't know about Airbnb, but for sure, see how else could I scan this? Market cap. Consumer cyclicals are above, a lot of stocks are above their 52-week highs or 50 moving averages, right? More stocks are moving above that. And that's going to come out in the macro report this weekend. A lot of good data. There's a lot of data. I'm actually going to go live on Saturday also with that. And for those of you that want to hear, keep tuned in, because I will be debating with the macro bear. It's not set yet, but he's saying that, yeah, he's up to it, right? He's the guy that made that video about the macro being bearish, and I totally disagree with him. I agree with him about a lot of stuff. I just interpret it completely different. Oh man. So hopefully hopefully we can schedule that and have a debate. Have a good little debate, little discussion on the macroeconomics of things. All right, so what else are we looking at here? I know I have the charts up, but I am looking at the sectors that are turning up. Oh, industrial. So we kind of seen a little bit. Oh, you know what? That reminds me. The biggest risk to the market right now in the short term is probably the UPS walkout at the end of this month. I think the market might react negative to that because there's such a big part of the supply chain. Look at Qs. You see the Qs over there in the left-hand corner turning up. Qs turning up. S&P bouncing off VWAP. Advanced decline. It's okay. VIX is okay, but we're getting some movement on the Qs, and we'll go over Nvidia. We'll go over the rest of the tech plays. Meta, I think, got a gap up, so we'll have to go over that. And again, if there's anything else that I can improve on the stream that you guys want to see, let me know. Let me know. If you have anything if you have anything you want me to look at or discuss, any charts, also do that. We'll do the technicals on here. There's just so much information. I don't know where to choose, right? So those consumer industrials are up a lot. Industrials are up a lot. And a lot of those plays, the biggest names here, UPS, Raytheon, Honeywell, Boeing, Caterpillar. We've seen Caterpillar make a big move. GE, Lockheed Martin, Deere Company. I'm just throwing out the biggest market cap names. Who else we got? We got FedEx. So industrials are doing well. That's because of the fiscal stimulus, right? The onshoring onto the US. A lot of that onshoring that we're getting, moving the manufacturing over to the US, so we're not dependent on foreign companies, foreign nations, right? China, Taiwan. So we're getting a lot of build. The jobs will stay straight. So A says, see what we got here. What do you think about core PPI? We went over that earlier. Core PPI. Let's pull that up. Let's pull up core PPI. See how fast I can be. There we go. Boom. Fast, quick. There we go. So core PPI. Core PPI. We are Thursday, right? We're in Thursday. So core PPI. Oh no, that ain't core PPI. That's year over year. Core PPI, month over month, Ace, or year over year? Which one? Month over month at 0.1. I don't know what the actual number is because these round up. Just these round up. In general, just so you guys know, inflation is actually 2.97%. The actual hard number was 2.97%. So this is so yesterday they just rounded up to 3. Oh, cool. Oh, that's to Disney. Okay, I don't care about Disney and Bob Iger. I know that's all over the news. So month on month, right? 0.1. We'll annualize that. Let's annualize the month over month producer prices. And what do we get? We get less than 2%. We get 1 point whatever. So great number there. Sorry I was late this morning. Was at the gym. No, you're good. I'm on TikTok too. If you want to if you just want to listen, let's say you're late, you don't see the charts, you just want to hear. I'll be on at 10 a.m. Eastern, and you can just hear it. So, anyways, the PPI core PPI year over year. Maybe you want to see that one too. 2.8%. No, not 2.8. Where did I get that from? 2.4. Still coming down, right? That is already annualized. So, I mean, we're at the Fed's target, in my view. We're at the Fed's target, and this will continue to decelerate, right? Maybe now we're kind of at. I know we're at the base effects. Like I know last year was the highest print, so we're expect. A lot of people say, well, we'll go higher from here because last year was so low. No, it just means we slow down. It just means the deceleration doesn't speed up anymore. But so we're going to kind of muddle around in these numbers, but we're at the target. We are at the target. The Fed's target was 2%. Forget what they say. They're going to keep the economy strong. If they got to stick around 2.5%, they'll be fine with that. They don't need to go 0.5%. They're not going to keep hiking rates because they want a 0.5 lower. They're not going to keep doing that if it risks the economy, right? They're just not going to do that. I think they're bluffing if they do say that. And there's a lot of things to look at, but either way, inflation, in my view, is collapsing. It is evaporating. The risks to inflate, the inflation risks are evaporating. We've been saying this for a while, that we thought this summer, and guess what? Shelter hasn't meaningfully rolled over yet. Just wait till shelter rolls over. We're really going to see a collapse in inflation. So now the bears must look over to you must look over to the economy and say, hey, the economy is going to collapse. Student loan crisis, what is it? Auto loan crisis, credit card crisis, delinquency crisis, blah, blah, blah. That's what they're going to say next, because inflation risks are just not there. It has to be deflation at this point. All right. Roku. Now here's why I'm long Roku, because that 75 level was violated. We're as long as we keep holding this level, we're gonna be good. And this kind of looks like Open Door. Man, Open Door is on fire. Sheesh. Right, got above that level, consolidated, and moved higher. So now from that level, we're up what, 78%? Wow. Hopefully we get that move. We get that move later. All right, so back to the other charts. 0.1 PPI month over month. Yeah, bro, it's gone, and that's gonna pump earnings. Like, people aren't seeing that either. We're headed into earnings season, and as we head into earnings season, that's where the next catalysts are gonna come from. Inflation, the inflation risks are gone. Like, they're not gone right now, but the expectation is that they will be gone, right, faster than expected. So that puts more pressure on the Fed to hold the pause or to be less hawkish, which is why I say the hiking cycle is done, right? The hiking cycle is pretty much over. It's starting to turn. So as an investor, you can wait for the hiking cycle to end, but you might be buying the S&P at all-time highs. You might be buying the S&P at all-time highs, because look at us, we're breaking out. Everybody wants to wait. I know people like to wait till everything is safe, but you're going to buy a lot higher. And if you're okay with that, that's totally fine. Me, on the other hand, I want to buy at the best prices. I want to get in early, as early as I can. And two, because I know Wall Street, a lot of Wall Street are still offsides, and they're going to pump my bags, right? I don't want to get in when Wall Street's running up at all-time highs. I want to get in when the turn actually happens. So, so that's how I say, there we go. AMD getting some support finally. All right. Let's hold that support there. Go to the 1 minute. I know that's not the ideal, but we did bounce because we're still at this trend, right? We still got trend support for AMD. And we're breaking out of this, immediate downtrend. Just look at the micro, right? Tesla doesn't look so good. I could throw Tesla up there too. Bank earnings tomorrow can help Tesla rise. I don't know if bank earnings actually help Tesla rise, to be honest. I don't know about bank earnings. I think Tesla needs Tesla earnings to come out. So I see Tesla just, consolidate a little more. And it's tough to enter Tesla at this point. It's really tough because it is still elevated. The risks are pretty high. I mean, it's elevated, but hey, if you understand what Tesla's coming out with, and I can't convince anybody that Tesla is an exponential type of play. I don't want to try to convince people that. You just have to do the research for yourself. I can tell you what I think, but for the most part, if this earnings report comes out the way I kind of expect it to, margins are bottoming, right? Tesla will explode. Tesla's going to explode, especially with the supercharger guidance, the expectations for that, especially with the full self-driving expectations. And who knows, that might be a negative catalyst. People might say, oh, that's stupid, Elon, you said this all year. But for the most part, again, they are dominating. And China produces the most EVs. That Shanghai factory producing a lot of EVs. We haven't even got the details on that. So I think the earnings report, not the EPS, the income, and the actual margins, I think the forward-looking expectations are going to send Tesla to 310, right? I think it's going to send it to 310. We got to get the margins bottoming, though. There's a couple things we got to hit, right? And I'm already long Tesla, right? I'm long Tesla. You want to see my position? I'll show you my position. But I am long Tesla because, let me see, I'll keep that there. Just because I'm going to show you guys my positions if I stop out, whatever. I'm in on Zoom. We talked about Zoom the other day. I've been long Tesla for a while. And I'm trading it too, right? My actual bags are in crypto because crypto is a call option. I have a lot more crypto. I know we don't talk a whole lot of crypto on here yet because there's a lot going in the stock market. It's harder for people. A lot of people just don't understand crypto. They really don't. And I'm not here to preach, all these crazy details that people don't understand. We'll do more of a deep dive in that in the future. But I am holding some options in Tesla. Let's see if I can just really reveal that really quick. Boom, boom, boom. These are my options that I'm holding, right? I'm not up very much. Expiry 2024. So I'm looking 6 months out, basically. Got these last month. So yeah, that's my position on Tesla. It is what it is. Once they go up a lot, then then I'll be able to be like, hey, check this out. I told you I was right. But we got to get past earnings. We definitely have to get past earnings. All right, so CNBC, what do we got going here? Why a better than expected earnings report season may have trouble boosting the market further. Oh, that looks interesting. I want to read that report. I definitely want to read that. Also, there was some news. I don't know if it's true. I don't even know if I should say it on here about Coinbase. Somebody said Coinbase was going to freeze their crypto accounts. I don't know. Heard that earlier. You think we just hit daily EMA on Tesla. Nice little entry. Oh yeah. It is pulling into the EMA now. It is starting to pull in that EMA. Let me double check that. I mean, I guess we'll do some technical analysis on Tesla too, and then we'll read this report. I'll be right back though. Hey, make sure you guys stay hydrated. I saw an article yesterday that talked about a lot of people have overeating problems or they eat too many carbs because they're really just dehydrated. We talk about in on our fitness channel, but stay hydrated. Always stay hydrated. All right, so some technicals on Tesla. It is forming an ascending wedge, okay, which is usually bearish, but for assets like Tesla, where people get FOMO, usually results in, you know, something positive. So if I go to the macro, obviously we already got that bullish cross. We got that golden cross here, 50 above the 100, the 200, you know, and it's fanning out. It's fanning out. That's straight momentum right there on the daily chart. We go to the 4 hour. If we go to the 4 hour chart, this is where we're finding support. And so you're right, Ace. I have Tesla pulling into and holding really right today, right off the 50 moving average, right on the 4 hour chart. So this is the 50 moving average on the 4 hour chart. See, does that look weird when I turn my head like that? Right, maybe I have to move this chart over so it looks like I'm looking in the camera. Hello. So yeah, I got that 50 moving average. So it did try to break out earlier, just couldn't do it. If I go to let's take off these market open, let's take off the pre-market, right? Removing the pre-market kind of gives you a better picture here. So if I take off the pre-market, actually, let me add a moving average. Let me see what this looks like if I add the SMA, 50 SMA. Never looked at it like this. Oh, I just need SMA. I'm gonna move. I'm just adding the 50 SMA to the to the 4 hour chart with no pre-market, because pre-market does sort of distort the chart. It's gonna look a little different. All right, so yeah, we're pretty much on that 50 SMA, right? Or the EMA. They're all, you know, it's all the same. All right, and then we have the S&P, you know, remaining strong above that level. The more we consolidate, we just keep making higher highs, bro. We are holding the pre-market highs also for the S&P 500. Probably a lot of stocks got to play catch up. The Qs haven't made a new high, but the Qs are back above VWAP. So that is Tesla. Nvidia. Nvidia, oh my goodness, I didn't even see that. Nvidia gaps to new all-time highs. So a lot of people are happy right now with their Nvidia calls. Those Nvidia calls are printing. Shout out to y'all that bought Nvidia. Big gap up there. A lot of FOMO here in Nvidia. I'm really wondering if this catch-up trade with AMD is going to play out. I really don't know, right? Because AMD keeps looking weaker and weaker versus Nvidia. But once everybody gives up on AMD, that's when it really starts to move. Right? Everybody gives up on it, and then it really starts to move. So we got to keep our eye on that. Let's see. Overall, I see a cup and handle here. Cup, handle. We're in that area of momentum of the breakout. We got rejected by that previous level. So this is the cup and handle. And once you get over 117, 118, I think it goes back to the previous highs, 132. And then if the overall market keeps grinding up, then we're headed for all-time highs. We haven't been to all-time. It's, you know, 164. AMD hasn't been all-time highs for a while. Yeah, AMD still has some resistance there. All right, so who else do we have here? Google. Oh yeah, Google's starting to break the downtrend. Look at that. Google's starting to break the downtrend. What does that look like intraday? Just straight up, just gap up, gap and go. Just gap and go with Google. See Netflix. Netflix trying to get out of there. I know Meta. Did Meta have a upgrade? Nah, Meta has just been on fire, man. If you miss Meta, you miss Meta. It's just straight up, straight to the moon. Amazon finally with the gap up, the pullback in support. Maybe it moves higher. Apple. Hey, Apple has a nice setup too. Apple has a nice setup too. It is trying to break above this bull flag. Yeah, I'd call it a bull flag. Right? You got that bull flag there for Apple. Microsoft looks like it's gonna go higher too. So looks solid. Looks solid to me. All right, so looking at this report, why better than expected? Actually, let me turn on SPY here and the Qs. Or what do you guys want to see? You know what I was wondering? Meta was your horse, Norberto? Okay. Yeah, Meta's been tearing it up, man. Meta's definitely gonna go. Is Meta at all-time highs? I don't think so. I think it will be at all-time highs pretty soon. Qs to all-time highs. Very hard to believe, but they're just gonna keep ripping. The inflation, like I said, the inflation data is non-existent, which is why I really want to debate somebody on it. What do I think about ATVI buyout? ATVI. Oh, we got some talk here. ATVI. Is that Activision? Microsoft? What do I think about it? I mean, it's been in the workings for like what, a year now. They've been talking about buying Activision for a while. So I don't really have a lot of thoughts on it. I think it's today it's just starting to get priced in. So over here on the charts, we looked at Activision Blizzard. Big move today. Actually, let me zoom into that. What is it looking like? Oh, was this just a big gap up? That's it? Oh, okay, it's consolidating. So Activision Blizzard needs to get above 91, 92. My thoughts on it are, Microsoft, and I haven't looked into this. Microsoft really wants to dominate the gaming space because they know that generative AI is going to be very key for growing that space. And it's going to be people are going to be using generative AI and chatbots for full self-driving, for gaming, for a lot of stuff. And Activision Blizzard, maybe I'm completely wrong here. I really don't know. But my thought is like, hey, that's just a move for the gaming space. I don't really know. I don't have much to say. The FTC is what? Appeal Microsoft's ruling. I'd have to look deeper into it. But on a technical basis, Activision Blizzard this is what we call a second, third day play. It is trying to hold the spot from the gap up. And let's see. Once Activision Blizzard starts to break and hold above 92, 93, I think it'll run. It'll start to run again. Right. But I don't really know the fundamentals, man. I can't really say much about it. I don't know the fundamentals. So I'm not the guy to ask, to be honest with you. Analyst price targets for Meta 360. Okay. Yeah, Asan. Yeah, good morning, Asan. Shout out. Let me give him that buzz. Let's see, make sure this works. Turn this loop off. There we go. What up? Yeah, they got him last year, so I don't know. I don't think it's not really a surprise. Usually it's like, okay, everybody believes it's not going to happen. There's some type of surprise. So I don't know much about the Activision Blizzard acquisition. I just know it's been on for a while. Yeah, no problem, Ryan. Oh, there you go. Tej, European financial system has fallen. What makes you say that? What makes you say the European financial system has fallen? And what do you mean by fallen exactly? What do you mean by fallen exactly? Is that like a signal that the US is next? Just so you know, whoever said that, Tej, thanks for the commentary. Europe actually lags the US and in China, so they're not really a forward-looking indicator. They're more of a lagging-looking indicator. Europe is weak though. They're weaker than, if we look at the big three. You got the North America. Oh, IWM looks very nice off of VWAP. FYI, go check out IWM off VWAP, forming a nice wedge right off of VWAP. I'll just pull it up on here. But yeah, the EU producer prices are like negative in the EU, so I'm pretty sure they're gonna stop tightening pretty soon. They might actually cut first because their economy might go a lot lower. There we go. AMD with the run up. Also for Europe, what is it? One of their biggest companies is at all-time highs. So why is the stock market going up in Germany, right? I don't think they're in a financial crisis at all. What up, Jonathan? But if you would like to give us Tej a little more insight, I'd appreciate it. A little more insight on what you're talking about there. All right, so what were we doing? Oh, we were trying to look at. I'm sorry, we were trying to look at this new report from Bob Pisani. Bob Pisani. Come on, Bob Pisani. This is gonna be huge, guys. Inflation evaporating. Got this on my board. Did we get any report today on PPI? Yes, we did. Asan. You can either go back in the YouTube video, listen to it, or I can do it for you. I'll just repeat it. This is a macro report anyway. PPI, bro, was 0.1 year over year. It's falling like a rock. Producer price. We already got CPI yesterday. What CPI told us we'll be at 2% next print. The dollar, big news, right? Big news. If you're just jumping in here, the dollar's collapsing. The dollar is beginning the collapse. That is the big risk on signal that I've been waiting for. It is at 99. It is currently collapsing right now. Now, I thought Bitcoin would explode initially. It's not happening. I was wrong, right? It's not happening. I was wrong. That's because Bitcoin is not fully correlated. Now, I think the narrative for Bitcoin is even more important, which is that ETF, right? More progress on inflation. Not progress on inflation, more progress on the ETF, on the regulatory framework. But the dollar falling and, not a big reaction other than stocks, staying afloat. It is pushing up equity markets. Obviously, we just gapped up based off the inflation report. Now let's try to frame this. Do I expect a hike? Yeah, I think they still hike. I think they still hike Asan because the economy is just resilient. I think they can keep hiking. Definitely. Do I think they're done? I think they've hiked one more time. They could be done. After this inflation report, I expect them to pause. That would be extremely bullish for the stock market if they paused after this report. But maybe they don't pause. I really don't know. I'm not going to make a definitive answer here. What I do know is this is risk on. The market's already priced in the rate hike and it's still going higher. The dollar's collapsing because inflation came in, showing us that it's evaporating. The PPI producer prices are evaporating, which means earnings are going to be better than feared. Everybody's expecting very negative, bad earnings. And if earnings outperform and guidance goes up, and we've already got from 113 companies have reported better EPS, right? Improving EPS guidance. Bro, the setup is bullish. This is a very bullish setup. It's really early. Well, actually, I don't even think it's early at this point. It's like, hey, the dollar's breaking down. So hey, what do you think is going to happen? Anyways, yeah, PPI came in weak, extremely weak. Core is at 2%. Month over month was at 0.1 or 0.2 or something. And yeah, we're headed lower. Look at IWM, just gap up, hold the gap, move higher. This is a risk on environment. There's your IWM holding VWAP there, right? There's your IWM holding VWAP. Yeah, no problem. Do I expect a hike though? The market does, but I think what that report did is it eliminated the second hike. Because remember, Powell or the Fed basically said we're going to do 2 more hikes. I think they still do 1 more for optics to keep their credibility, to promote their credibility. And if they don't hike, man, the market's really going to take off. If they do hike, the market already priced it in. And I think this great report just points to or could result in this being the last hike, right? So why better than expected earnings this reporting season may have trouble boosting markets further, by Bob Pisani. There's good news and there's bad news for earnings. So let's take this in. Maybe this guy might show something that we haven't known. Hey, what up also, Jonathan? If they don't hike, the market explodes. Yeah, especially with the dollar collapsing the way it is. The dollar is signaling risk on, bro. And now we're heading into earnings season. This is our last catalyst. I don't want to say the last catalyst, but it is the next catalyst to really boost the market. Remember the last earnings that I went over Q1, that's when we started to rotate out of the bear market, out of that 3,800 level. That's actually when I first started live streaming on TikTok, actually, is whenever we had earnings, because I was like, hey, better than feared earnings. We're going higher. We're going to rotate up. Happened. Now we got to 4,200. Now we broke out of that. Now the macro is improving. So everything is turning up, right? In the face of bad positioning. So here's the report. There's good news and there's bad news for earnings. The good news is that the second quarter is likely to be the trough for earnings. I agree. I think it is likely to be the trough. The bad news is earnings are not the problem. It's valuations. Oh my God, here we go. PEs, they're very they're very high, and that may prevent stock prices from moving forward, even if earnings reports exceed estimates. All right, so he's saying that yes, we may be troughing, but prices are elevated too much. So kind of like we front ran this already, or we, prices, as far as if you're a PE guy, if you're a PE valuation guy, prices already went up too high. So basically what he's saying is there's not a whole lot of surprise for price. Okay, I disagree, because we also have the macro inflation coming lower. So he says we don't have a whole lot of how can I frame this? There's not a whole lot of juice. There's not a whole lot of juice because prices already went up. Okay, disagree though. There's so much cash on the sideline. That's how I gauge it. All the cash on the sideline. When people see, when investors, right, when these fund managers, when these fund managers, with these retail investors, even though retail investors are already jumping in, when these guys start to see that earnings are bottoming, I think they do start to jump in. I think that's where the juice comes. Okay, the bad news. Okay, I already read that. The good news in Q2 is likely to be the trough. This is so bullish. Everyone knows that analysts tend to lower forecasts going into earnings season, and then companies top them by a small margin, usually 3 to 6%. Analysts have indeed lowered estimates for the second quarter, but not by much. Many strategists, including Savita Subramanian, boy, I'm going to give myself a clap for saying this name, Savita Subramanian, Bank of America Securities. I can't say the last name, Subramanian. Okay, there we go. Because I've heard it a lot of times. Savita Subramanian. Okay, Bank of America Securities expected the second quarter to be the trough for earnings, and analyst estimates agree. Q1 54, 83. You don't really want to hear that. This is just S&P 500 earnings by estimates. So Q1 was 54. Q2. This is supposed to be the bottom here. Q2, actually, if this is the bottom, that's extremely bullish, because we only go up from here, which means we actually come in lower than we did last month, which maybe be expected. Remember, the bank regional crisis happened in Q1, which should price itself in Q2. So I think the financials kind of start off terrible, and that's why we might just consolidate. Even though we got really good inflation report, I think the banks kind of start us off rough. The banks start tomorrow. Bank earnings start tomorrow. That might start us off pretty rough, and then we'll see how we progress from there. Oh, hey, Zoom starting to make that move. Hell yeah. Oh, excuse me. I don't know if I can say that. Anyways, right. So that's it. So the outlook for the rest of the year is not nearly as dire as it was 6 months ago. The earnings apocalypse, the collapse in earnings that many feared would be coming along with the serious recession in 2023 has not materialized. No, you're 100%. Actually, where's my there we go. I need to get the this pisses me off about the stream deck. Anyway, Oh, no, I didn't mean to do that. I'll just read it. This is just too much. This is too much, bro. Man, and I'm sneezing. Is this window open? All right. Get some more water here. Let's try this again. All right. So the bad news, right? Oh, no, I didn't even finish the good news. So he's basically saying that the earnings collapse, the apocalypse in earnings just hasn't materialized, right? Hasn't materialized. And the recession is not materializing either, right? So far, the soft landing scenario has been the correct scenario, one where inflation is slowly coming down, job growth moderates, but still remains healthy. And what that means is that job growth is still slowing on a year-over-year basis, but it is just slowing down. It's not collapsing, as I've said, and it remains healthy. That is good. And corporate profits are stable and beginning to slowly improve, right? Yeah, 100%, because of all that cost cutting that we saw, right? The PPI is lower, that pumps margins. The dollar coming down, we didn't even mention that the dollar coming down actually helps multinationals, right? So the dollar coming down helps. And then also you have all the cost cutting, right? Microsoft still letting go of some people, Amazon, all these cuts are going to help margins also. What this means is that the price of the S&P 500 has gone up to do multiple expansion. Oh, okay. What this means is that the price of the S&P 500 has gone up due to multiple expansion. He didn't say due to, though. That's weird. Maybe I can't read. Not because earning estimates have been rising dramatically. Okay. Yeah, multiple expansion from the AI theme, from improving macro, from the soft landing. Okay. S&P 500 S&P 500 ratio, P ratio's fourth quarter. What is this? Forward fourth quarter, January 17.2, today 19.2. The S&P is now trading at over 19 times earnings estimates for the following 4 quarters: Q3, Q4, Q 2023, Q1, Q2, Q blah blah blah. That is not only not a recessionary multiple, but it is one that usually associates with an expanding economy, right? And we have talked about that. Maybe the economy is actually starting to expand here because services bounced. The services PMI went higher, right? And we talked about that before. The service economy is 70% of the economy, and if it keeps expanding, then that's signal that the economy is starting to expand. Now we just need manufacturing PMIs to bottom out, and we could be seeing that by the end of the summer, especially with all the onshoring, with all the fiscal policy. I think we're gonna actually come up here, which is why they could keep rates higher, because things are just very strong. But when inflation collapses, you know, the last straw is the oil prices. Everything else is falling. If oil comes down, the Fed can start cutting earlier, and boy, this market's going to be up if that is the case. If not, we'll see what happens. It is also see, what did we just read? It is also rarefied territory. A P ratio of 19.2 ranks in the 84th percentile since 1985 at a 9.2% premium to its 10-year average of 17 points. So it would be above average. Okay. Bottom line, S&P 500 4,400 at 4,400 with forward earnings of $230 today, 19.2 multiple, is not nearly as appealing as the S&P was in January when it was at 3,800 with forward earnings 72 multiple. Okay, fair enough. So the S&P is going higher. That's basically what that means. What's it all mean? With higher stock prices, even good earnings may have trouble moving the market. The big move in the S&P 500, Chris Harvey from Wells Fargo suggests EPS results and guidance will need to be exceptional to get the market materially higher. A sell the news reaction seems more appropriate. So Chris Harvey from Wells Fargo, I know he's been bearish for a while. He's saying that we need very exceptional earnings for the market to boost for guidance to the next quarter. I disagree. I think we just need a bottom out. I just think there needs to be a clear signal that you know, that EPS is starting to bottom, that revenue earnings are starting to bottom out. I think we need that signal. And he says that it's going to be a sell the news reaction. I think it'll look like it at first because there is some roughness here. But once we get in big tech, which is always the key, once we get in the mega caps, that's when we really start to see what the market starts to price in. for RKBL. Oh, Rocket Labs. We'll take a look at Rocket Labs in a second. Let me finish up the story. So what next? This is Chris Harvey from Wells Fargo. Some companies are indeed exceeding expectations by a wide margin. Thursday morning, Delta reported record revenue in June quarter with earnings of 268, well above the expectation of 240. Full year guidance is also expect above expectations. Great. That may be an exceptional report. However, other early reporters. Oh, okay. Other early reporters that have reported more modest beats have had much more muted reactions, and many have even seen that their second half estimates reduced. Okay, so it's a mixed bag. I agree. We're going to see a mixed bag for sure. Come on, Roku. Roku's holding that 75.50 level. Got to hold above that level. What's going on with the Qs? Still bouncing. S&P still bouncing. We're still holding up there. Yeah, we got to hold this level for Roku, or else I got to stop out of my position. All right. Here's why the market needs to broaden out. Most of the reason the S&P 500 multiple has expanded is because of the extraordinary gains of a small number of stocks: Apple, Microsoft, Nvidia. This year, at a 27.2, the S&P technology sector PE ratio is well above both of its 5 to 10-year averages. S&P 500 technology index forward 12-month PE ratio. So you do want to look forward. Today is at 27.2. The 5-year average is at 22.4. The 10-year average is at 19.3. So from a valuation standpoint, he's saying the market is overvalued, and we will keep hearing that. We'll probably keep hearing that. By contrast, 8 of the remaining 10 S&P sectors have seen valuations that are either lower or only slightly higher than the average for the last 5 years. No wonder bulls are praying for the market to broaden out. It's the easiest path to get the overall market higher. While headline S&P 500 Q2 revenue and profit will likely prove uninspiring, at the sector level, there are many groups performing reasonably well. Nick Colas from the Data Trek said in a recent note to clients, this should encourage investors to look for opportunities outside of big tech and perhaps allow other groups to play catch up after lagging the overall market year to date. Cool. Data Trek. I got to find that guy. FactSet Data Trek. So basically, they're saying that the market is overvalued. But here's the thing. The market moves more so. Let me try to make this statement really quick. Okay. Yes, the market might be overvalued, but the fact of the matter is that there's a lot of cash on the sideline, right? There's a lot of cash on the sideline. And regardless of your PE ratio, that could factor in later into the year, maybe next year. But the fear that we just saw with higher interest rates, higher inflation, a collapse in recession, a lot of people sold out, right? Still sold out pretty hard. So now that the AI narrative is starting to hit, which is 10x productivity at a tenth of a cost, and inflation expectations are coming down lower than we expected, and there's no recession, people will psychologically FOMO, and they don't want to miss out on this rally, especially when they see Apple at all-time highs, Nvidia at all-time highs, Tesla with all these, Tesla, Google, Meta going higher. So either way, the PE doesn't matter until it does. So once we get a normalized environment, once everything starts to get priced in, because it's not priced in, right? We haven't priced in a normal economy. We haven't priced in the recovery. We haven't priced in Fed, the Fed cycle being done. It is being priced in, I believe, right now. So as we do price that in, then we can look at PEs later and say, okay, this company's overvalued. Maybe it trades sideways, but if they keep coming out with more catalyst, right? Apple changing the game when it comes to work from home, crypto, whatever it is, as the technologies come out to solve, because really we have a GDP problem, right? Our population growth is falling. We have to keep printing more debt to actually fuel growth. How do we solve that? We solve that with more productivity, and that's going to come from AI, energy storage, right? Energy solutions that make it cheaper. That's how we solve it. Now, all of a sudden, these companies keep going higher, and the P ratio really doesn't matter, right? As government keeps printing, they're going to keep pushing things higher. So valuations don't matter until they do. But right now, they don't, because the macro is more important. As like I said, the risks are coming off the table, and as we get that squeeze, it's not linear. You're not going to linearly go higher. We're going to squeeze higher very quickly. And then once we kind of finish off on that squeeze, then valuations, I believe, will start to come into play and say, okay, who has real growth? Who has real EPS? How many of these stocks just went up because the overall market went up? So that's my view on that. I just think, analysts think that things are going to be linear, and they've been wrong for the last 10 years. They're wrong about Tesla. They're wrong about Amazon because they expect this linear stuff. It's not linear. It's exponential. Human psychology says, human psychology is when people are fearful, they sell hard for no reason. When people are excited, they buy hard for no reason, right? Some for reason. Oh shoot, we got Fed Daily on the report. We got Fed Daily up here. I actually want to hear this. This is the Fed speaking with oh nice. I want to hear her talk. We're gonna listen to Fed Daily from San Francisco. From San Fran. Dang. Boy, she's been talking a lot. Maybe this is why the market's a little shaky. All right, so we got RKB is picking up. Do you think it's a start of a real short squeeze? Well, first RKB, let's look at the short interest. What are we looking at here? Let me switch this. Dang, the dollar is collapsing, man. That's hey, we talked about this. Ever since Janet Yellen went over to China, that's when the dollar started to collapse because it was hurting the Chinese yuan. And I wonder if we did a deal with them. We could have done a deal with them. It is speculation, but you got to think logically. And the logic is that our dollar is too strong for China. And in order to broker a deal to get global growth restarted, is it RKBL? And we need a weaker dollar. So I don't really know. Maybe I'm wrong. I've heard about it. I've heard some people talk about it. Am I putting this under RKLB? Oh, RKLB. So is this a short squeeze? Well, let's look what it is. RKLB. Wow. Oh no, the short float is only 6%. So I wouldn't say that's a gigantic short squeeze. Maybe it already started a short squeeze. So no, I wouldn't say this is a big short squeeze. The short float, look right here. I guess you me zoom in a little bit. Short float is at 6%, right? For it to be a real short squeeze, not to say the squeeze there is no squeeze at all, but for there to be a meaningful short squeeze, you want to see that short interest of like 15 to 20% at the lowest. For there to be like a CVNA type of short squeeze, right? Carvana had a monstrous short squeeze. I don't even know where they're at now. What is Carvana at? CVNA. Carvana is at short float 43%. It was at 50%. Carvana was at 50%. So you can see 70% of the float has had to cover, right? So 7% had to cover for Carvana, and you saw, and this was back at like 15. So that was a big move for people having to cover. So Carvana could keep squeezing. If it comes back down and has better news, better earnings, it could keep squeezing again. But anyways, yeah, going to RKB, I don't think it's a short squeeze. I just think people are piling in for the expectations of what they're doing here. But again, I haven't really looked into them, so I can't give you too much insight. Rocket Lab date of second quarter financial results. Launch multiple satellites as part of upcoming recovery mission. It might be a lot of hype. This just might be a lot of hype. Rates coming down. This is a riskier asset. Oh no, Roku. Let's go, Roku. Hold up, bro. So yeah, that could be the case there for Rocket Lab. Do you think? All right, so we got that through. Oh, I didn't even see that. Ryan Lang, the buyout is going to happen Monday, $95 potentially for whoever that was. All right, so yeah, let's check out. I got to turn this music off so we can hear the Fed governor. We got to hear the Fed. What is the Fed saying after this inflation report? This is actually very important. What do they have to say following such a weak report? Do they stay hawkish, or do they remain? Do they show some dovish pivot? The rocket launch cost $6 million compared to $60 of SpaceX. You mean 60 million? Okay, six. Okay, so their rockets cost six. Their rockets cost less, is what you're saying, than for SpaceX. So that should be a catalyst, right? So if they can sustain that, like again, this is not my purview. I don't really understand rockets, so I couldn't tell you. But usually, what it is SpaceX is by far the best rocket company, and so there's always a catch here. Can Rocket Labs go higher? 100%. But you really, because I've seen Virgin Galactica, right? Everybody's bullish on Virgin, and it got smashed because it wasn't successful, right? Even what's his name, ditched the company. Guy that used to work at Facebook. Either way, my point being, make sure you look into Rocket Labs to see the comparisons. Look at the bull and bear cases for Rocket Labs. Look at the differences between SpaceX fundamentally. Can the price go higher? Sure. But it always takes one earnings report, and these companies get crushed. That's my warning. These companies get crushed on one earnings report. These things are very technically, like, they're very hard to do, right? They're very hard to do. So this could be hype. It probably is hype. And I'd be careful, especially when you're going up against like SpaceX. Look at NEO. Look at all these other companies that came out with electric vehicles. As the environment got tougher, as rates started to elevate, as their earning reports came out, they all got smashed. They could be trades. Don't get me wrong. They could definitely be trades, but NEO fell considerably, right? It got crushed. It fell 88% because they just don't have the, now I think it's XPeng, XP, is it XPV? That is, no, I don't even know what the ticker is. You just got to be careful with these earnings reports. That's what I worry about the most, is they have a bad earnings. So I always, like, if I'm going to trade or invest, get in after the earnings and try to write it up so you have a cushion, because you could have one bad earnings report and then all of a sudden you get smashed. And if you had a cushion, it's not as bad, right? And materially, what if it just keeps going lower? They provide a small cargo to the International Space Station. Okay, yeah, maybe they have a niche then. They might have a little niche there. I don't know much about them, so you probably know more than I do, actually, about Rocket Labs. There's a guy, his name is Dead Inside. I know he used to talk about Rocket Labs, so check him out on his YouTube channel. His name is, I don't know if I could even, can I say that on here? That's his name, Dead Inside. So let me see. I'll write it in the chat. I think this is how I think that's how he spells it. I'm not sure. Something like that on YouTube, but he does some analysis on Rocket Labs. Maybe he doesn't, but I know he was holding a lot of Rocket Labs at some point, and he does a lot of good fundamental analysis, deep dive. So check that guy out. We're going to listen to Mary Daly, see what she has to say about the market and this new report. Yeah, you're welcome, Hassan. Microsoft, are you on the Bluetooth? Viral videos, are you in the Bluetooth? Hey, Microsoft looks like it's ready to blow. It's getting above 340. Right, it's getting above 340. Let's go to that 4-hour chart. Do some technicals on Microsoft. We got the call out on Microsoft. It is currently holding the 50 moving average. Oh, let me take these off. The 50 moving average looks solid. Global net liquidity. And by the way, you global net liquidity guys, it's turning up. I know somebody said global net liquidity is turning down, but I think it is starting to turn up now. So yeah, Microsoft is solid, bro, especially with the overall market turning up. The dollar, dollar just making new lows. We're at 99. This is big. This is big, man. The dollar collapsing is huge. It doesn't feel like it currently, but we did get that big gap up in the market. So keep your mind on that. All right, we're gonna go over to CNBC, and we're gonna go over to CNBC and listen to Mary Daly kind of respond to what she has to say. Or actually, we want to see what the Fed's saying, right? This is part of the Fed. So what is the Fed saying here? You guys can't hear it? Uh, always got those issues. I turned off the background sounds. What the heck, bro? Pisses me off. Can anybody else hear the sound? I'm gonna play it. Let me know if you can hear. It should be good to play. I mean, let me reshare it to that actual tab. All right, let me know if you guys can hear this.
On inflation, this month of data is very positive. I hope it's part of a downward trend in inflation, but I am in a wait and see mode on that because I remain resolute to bring inflation down to 2%.
President Daly, could you talk about the sorts of things that some folks thought might?
All right, cool. She said that there is progress on inflation if you missed it, and that's good. She's admitting it. So let's hear what the questions are. They're looking for a dovish pivot here.
Alleviate the need for you to hike more. Things like bank credit tightening and also the lagged effects of monetary policy. One of your colleagues thinks that we've seen the effects we're going to see. Do you still see more to come from the 500 basis points that you've raised?
So the way I think about it is, and I start with the research evidence that comes out of the economics profession. And what we find again and again is that the lags in monetary policy, there is no real consensus, but there's a rough estimate. They're between 12 and 24 months. And that's a lot of time difference, but still 12 to 24 months. If you think about when policy first became restrictive, it was last year, middle of last year to September of last year. So that means there's still, in my judgment, cumulative effects of monetary policy to work their way through the system. And I think that's part of the slowing we're seeing right now in the labor market, in inflation, in consumer spending. These things are all consistent with the lag still working their way through. But I also recognize that we can't just, hold out hope that lags are going to solve all our problems, which is why we have to remain resolute to do enough, bring the rate up to a sufficiently restrictive place, and then hold that rate for the time it takes to bring inflation clearly back down to 2%.
How about bank credit tightening? Is that something you still see is going to slow the economy?
It's a great question. And right after the initial banking stresses, my own estimate was that could be being important, worth about 1 or 2 rate hikes. And at this point, when I talk to banks throughout my 12th district and look at the aggregate banking numbers throughout the United States, you really don't see that kind of credit tightening. You don't see right now credit tightening that's far in excess or even in excess of what you would expect given a slower projection for the economy and economic growth. So I take that as there isn't as much credit tightening as I thought, but I do think that from the research literature that this takes a while to show itself. And so I think we're still looking into the fall before we would have a declarative statement to make about the extent of credit tightening and the effect on the economy.
Yeah, I mean, so far so good, as you say, on that front, President.
Well, you know why there's no credit? I mean, they know this, but they're just not talking about it because they have to manage expectations. The problem is when the bank stress and the credit crunch actually showed itself, reared its head, right? When the dragon reared its head, what happened? The Fed stepped in, right? SVB collapsed. Regional banks started to collapse. Money market funds started receiving the deposits from the regional banks, lost collateral, became insolvent, became illiquid. Here comes the CDC. What is this, Fauci? Here comes the bank turn. Who is it? The FDIC steps in, right? FDIC steps in, and then you get the Bank Term Funding Program. So that was the credit crunch. They just resolved it really quick. They stepped in. That's a soft landing, right? That is the action. That's the behavior. That is a reaction you want to see for a soft landing. So we did get that credit crunch. Is there going to be further? Possibly, but what are they going to do? They're going to step in again. They can see these risks come. They're not surprising anybody. Bukowski, what up, Bukowski? What's your thoughts on second wave of inflation? Does the cycles support it, or can we possibly over tighten and get deflation? Hey, that's a really good question. Let me hit on that, tap on that really quick. Second wave inflation. So the theory that people are saying is, oh, well, inflation peaked in June. So this June, which is this print that we just got, it is July, but we saw the June print. That's the bottom. Now inflation is going to go up because we're measuring year over year, and the base effects no longer support you. To make it very clear, what it means is that we've basically, the measurement has hit the lows, and so now we're going back up. It's stupid though, because mathematically we're not measuring, like mathematically let's just put it this way, Bukowski, right? For you, growth is still slowing. The economy is expanding, but it's slowing. So you can't get meaningful inflation ticking up until the economy is actually expanding at a fast pace. When you get more demand coming in, right? Retail sales are picking up, not just payrolls. Payrolls aren't enough. Payrolls in the labor market being strong doesn't mean inflation. It is retail sales going up. It is GDP going up. GDP is trending lower, right? Better than expected. I think it's bottoming out, but GDP is trending lower. Retail sales are trending lower. ISM manufacturing is still low. Yes, Biden is spending in the economy, but that's strengthening this. We're strengthening the supply chains, which takes away that demand inflation if it does come in. So stronger supply chains, actually I have a chart of that's going to be in the macro report. When you have strengthened supply chains, you reduce the demand pressure, right? So it's non-existent. So no, I don't think we get resurging inflation. I think it bounces, and what we do is we see sticky inflation because we pretty much fell really quick, and now there's not really a fast, there's all the room to fall and inflation has happened. But we're not going to resurge by any means unless supply chains go offline again, unless that UPS risks, the UPS risks come in. That is a risk where UPS, everybody stops working. I don't think it's going to happen, but it's kind of like that debt ceiling stuff. And the supply chain shut off. All of a sudden, inflation goes up because there's no supply chain, right? But somebody else will step in. We'll solve it another way. Robotics step in. There goes more AI. There goes more robotic stuff. Either way, point being, I don't see second half inflation because supply chains are strengthening, and really growth isn't picking up. It's just slowing down, and it's not collapsing. So no, I don't see that. The only way to really get inflation to come back up is if the supply chains get jacked up, or if Biden sends out stimulus checks. That will accelerate demand. If he sends out stimulus checks, hey, we're going into the next year, here's a stimmy check because they shut down. If he does that, yes, because you get excessive demand without the production, that would get us back up high. Hey, we're at negative PPI. China's at negative PPI. We're at 0.1, so we're almost negative. Europe, the Eurozone's at negative PPI, so all the inflation indicators point lower. But your second question, does cycle or can we possibly over tighten and get deflation? Yes, I think we're actually at more risk of deflation, but that's not a bad thing. Why? Because that's where the Fed can support. The Fed can't do nothing about supply side inflation. AI can, but when it comes to deflation or prices coming down, that's actually a bigger threat because it hurts earnings. It hurts earnings. It hurts. Inflation is actually good for EPS, by the way. It's good for stocks, somewhat inflation. So if we get deflation, prices come lower, stocks earn less, companies fire, unemployment starts to rise, right? That's kind of the mantra. Who knows if it actually happens that way? But either way, the Fed could step in and start, they could slow down QE. They pause first. They pause. Okay. Oh, deflation, we pause. Maybe they even cut interest rates. They start QE. They start buying back bonds. So they lower the cost of capital for the actual bond market, for the real borrowing rate. And they restart their balance sheet. So they can solve deflation. That's easy, right? Joe Biden can literally do more stimulus. So we can solve deflation. It's hard to solve inflation is what I'll say, to answer your question there.
Daily. So if you look at that and you look at some of the recent data, the fact that housing looks to be picking back up again, that the growth figures are pretty much intact. The consumer's not falling apart. The unemployment situation is not really a problem. It's still a tight labor market. Does it make you worry that inflation could bubble back up here and that you might need to
right on time,
that scenario from happening?
Well, I'm certainly mindful of the fact that while we've put over 500 basis points or about 500 basis points of tightening in the system over a rapid period of time, we still have an economy that has a lot of momentum. And this is why we continue to say, well, we are going to keep working on rate hikes until we are sure that inflation is on a path to come down to 2%. It's one of the reasons, as you mentioned earlier in the program, that, I said 2 rate hikes this year is still a reasonable projection. It's for that very reason you said. It is a risk that we under tighten. It's a risk that we over tighten. And that's why data dependence, meeting by meeting decisions is so important right now.
And I would imagine wage growth in particular.
Hold on, I'll be right back. Sorry. All right, small bladder. Sorry about that. So wait, really good question. So she is kind of going over the inflation, deflation. Let's finish up to hear what she's saying about wage inflation.
How much do you weigh that as a factor, and what do you see happening there?
So one of the things that I think is an underknown fact is that wage growth often follows inflation. And so it's really hard to say that wage growth is going to lead inflation down. But we do know firms are paying a lot more to compensate their employees. And yet at the same time, and this is the irony of this particular expansion, is that firms tell us that they're paying more to get workers, and workers are telling us their wages can't keep up with inflation. So it is ultimately the job of the Fed to bring inflation down so that we have a normally functioning economy where workers get paid, firms feel like they can still make a profit, and workers don't feel like they're falling behind on a treadmill each day because inflation chews away their wage earnings. That's what we're trying to do.
President Daly, I want to shift gears a little bit and talk about the demise of Silicon Valley Bank, which was in your district. Viewers know it was in the
My bad. Before we continue, hit the like button. Support the channel. Hit the like button. What else is there? Hit the like. I always forget to say this so we can help with the algorithm. But yeah, don't forget to subscribe and hit the like button. Appreciate you guys. We'll get right back to it. Thank you. Thank you very much.
The San Francisco district. And we've reported here on CNBC that bank presidents are not in charge of the supervision of banks that size. But I do have a couple questions from the reporting that I've done. Were you aware of the interest rate, of the flaws in the interest rate model at Silicon Valley Bank, even though you did not have direct supervision over the bank?
So the way supervision works, and it's a really good opportunity to help your viewers understand how Fed supervision works. It is directed by the Board of Governors. The supervisory framework is in the board, at the Board of Governors. And then the reserve banks, I have teams here in San Francisco, supervision teams, and they report to the Board of Governors. And this keeps me ring-fenced, rightly so, from the day-to-day operations of supervision so that we can have Greg Becker, for instance, sit on our board and not be concerned that there's crossover. So one of the things that the viewers, I think, need to know is that bank presidents don't have a direct role to play in supervision. And in fact, that's a feature of the system that prevents conflict of interest and also allows continuity. If you're a bank in North Dakota, you're treated the same way as a bank in California. So that's the answer to the question. I'm not regularly aware of these things.
So you weren't aware of the problems at Silicon Valley Bank. When I did that story, Mary, I talked to several former bank presidents, and they said it's a feature of the system that bank presidents aren't involved in the supervision, but they also think it's a flaw of the system. Should the bank presidents who have the local knowledge and are in the area there be more involved? Is it a problem that the bank supervision is really spread out?
Okay, I'm not so sure we care about this, bro. I don't think we really care. We just care they're gonna pump the bags, right? We just care they're gonna pump our bags.
So I will
Care about no
offer my
bank
opinion. I think
supervision.
it's a feature of the system. As
It's
I
going to
said,
Bitcoin
the bank
anyway.
in North Dakota feels like it's got the same supervisory program.
Let's
as
get back to
like
macro.
interest rate risk, credit conditions, commercial real estate. One of the ways that ultimately, as Chair Powell has said, as Vice Chair Barr has said, that's the Board of Governors. The buck stops there. And I think that's important for the American people. But the other part of your question is it important for the Board of Governors and supervision in general to hear from Reserve Bank presidents on what things are affecting the economy? And there we do have an opportunity to voice our concerns about things like interest rate risk, credit conditions, commercial real estate. One of the ways that, in terms of the credit conditions question that Sarah asked me at the beginning, we learned that from talking to our bankers and at CEO roundtables, in our councils and board meetings, and that we get that information from that source. And I think that is critical. So the learning I would take from this is that more of this dialogue between Reserve Bank presidents who are collecting this information and the Board of Governors who really oversees supervision in this, Vice Chair Barr in particular, I think that's critical. And we're always learning. I mean, this is the thing about the Federal Reserve and the Fed supervision is we're always learning. And this is a good opportunity, unfortunately, to really learn a lot. And I like what the independent review Vice Chair Barr did about this and found that, here's the things that we need to specifically focus on. But one of those things is ensuring we have a culture of dialogue where we're looking around the corner. And I think Reserve Bank presidents are uniquely positioned to help look around the corner and say, what are the emerging risks and how can we mitigate against those before they become real problems?
But Fed Barr's report did trace the problem to quote widespread managerial weakness. And I mean, you just laid out that it wasn't under your purview and you couldn't be directly involved, but your team was, right? As supervisors, this was a fully supervised.
Hey, real quick, if you're just jumping on and you have a question about the macro, right? My interpretation of it, I'll be happy to answer your questions about what is the macro picture starting to look like. It is starting to turn. We're starting to get things to fold. We're starting to look better than expected. The dollar's starting to break down. Bond yields are starting to peak, and the market is risk on. Hey, the market is risk on. So if you have questions, let me know.
And regulated banks. So how come managerial weakness and negligence wasn't spotted?
So the first thing to know is that there are over 4,500 banks in the United States that did manage their risks well. And 3 banks, Silicon Valley being one of them and the Fed Bank, did not manage its risk well. And as the Vice Chair's report squarely starts with, that is the responsibility of the management of Silicon Valley Bank. Now, supervision, and I would say Fed supervision, Board of Governors working collaboratively with the Federal Reserve Bank of San Francisco teams, has also responsibilities. And those 2 things that I think are really critical are the 2 things identified in the report. First, identifying emerging risks. The firm was growing quickly and becoming more and more complex, moving through the Fed's tailoring or tiering system. And we, as a collective, need to identify those risks, look around that corner, and take mitigating strategies. The second is when you identify those, and many were identified, be more forceful in ensuring that management is fixing those issues so that the kinds of things that happened at Silicon Valley don't happen. But if you ask, why did Silicon Valley Bank fail? It ultimately failed because depositors lost confidence in the solvency of the institution and decided in the course of a day to withdraw their funds. And that is a failure recipe for the bank. And we can trace it first back to management. And then there's a lot of things that we can learn about how to supervise more effectively as we look forward into the risks and manage those properly.
I wonder if one of those things is that there has been a lot of focus of supervision and regulation, we know, on the bigger banks. That was the last problem, right? That was the financial crisis. And in your district, you have Wells Fargo, which has been a bit of a problem child lately. Were there more resources allocated towards supervising that bank, which maybe left a hole in banks like SVB?
Well, you've referenced it, and I think it's actually true that institutions generally are working really hard to fight the last war. But we also, and this is why I'm so focused on, let's make sure we're looking around the corner to what the next emerging risk might be. And the Vice Chair of Supervision, who does oversee this and will make these decisions, I don't have decision rights here, but he's already referenced that building up supervisory capacity, ensuring that we have the right number and the right intensity of supervision, especially in rapidly growing firms as they move from smaller institutions to mid-sized institutions on their way to larger institutions, is one of the critical findings of the review and one of the things that we'll collectively be focused on as we work every day to improve supervision in the Fed.
Can we shift back to the inflation interest rate story, if you don't mind here? I just want to get back to this issue of where are you aiming for? And one of the things that, the first things I learned covering the Federal Reserve a couple decades ago was you guys think about real rates. And when I look at the projections, I see a real rate projection of about 1.5%, leading to a real rate projection of 1% in 2025. And a long run real rate of 0.5. And all I'm doing there for folks who want to play this game at home is taking the core PCE projection and subtracting that from the funds rate. Could you tell us how you think about this, President Daly, when it comes to real rates? And do you see the economy or see the Fed getting tighter and tighter as inflation, or if inflation continues to fall? And will you maintain that level such that you actually get a higher real rate?
So that's a terrific question. And I think you and I have talked about this on a previous program before. The real rate is something we absolutely follow, but we don't estimate the real rate very well. There's a lot of uncertainty around this, but the current estimate, the median of the summary of economic projections, is 0.5 as the neutral real rate that we're aiming for. And then you had 2% inflation, and that's 2.5% that we'll eventually get to in nominal terms. So what's the path to get there? So my own view is that you need to move rates up to restrictive territory, and that's our rate hiking that we've been doing. Then ultimately what happens as inflation starts to come down, the real rate's just naturally rising because you're taking that inflation off. And so we can then, as you look out into the projections, you see rate cuts. Well, the rate cuts aren't really because, in my judgment, we think inflation's already at 2%. You could look at the projections and see that's not true. It's because we're trying to keep the real rate in many ways more or less steady and to coming back down to a normal level as the economy gets closer and closer to 2% inflation. So my own path right now is you continue to raise rates, you get the restriction you need. Then as you see inflation coming down, you can start lowering the rate, the nominal rate, so that you can bring real rates down to that neutral level at about the same time that inflation is coming to 2%.
Whoa. Did she just say if inflation comes down, we can lower rates? Bull market. Right? So this is the golden pocket scenario. I know it feels hyped up. This guy's hyping it up. He's hyping up the stock market. He's too bullish. All right. Well, earnings are coming in. They're starting to bottom. This is the bottom of the cycle. The stock market disagrees with the bears. The stock market is going up for a reason, because it is sniffing out the fact that, hey, if inflation comes down and the economy slowly trickles lower, but it doesn't collapse, it's still in expansion territory. If you look at all the indicators, above 50 is expanding. So we're just not expanding at the same rate, right? The slowing of the economy is we're still adding jobs, just not at the faster pace. We're not accelerating the expansion. We're decelerating, but the expansion is still happening. You're still adding jobs. So that's going to continue to happen, which doesn't pressure inflation higher. It keeps it lower, right? Keeps prices in line. And the rate hikes are still elevated. That keeps things in line. Now, if inflation collapses, as we're seeing, the PPI is already at 0.1%, which leads headline inflation. That's going to come down, right? Shelter is going to bring down core inflation. That's going to go lower. If we get low enough inflation, what did she just say? We can start cutting rates. Is this not the biggest? Oh, Judge just ruled for crypto, for real? Did I just miss that? Appreciate the upgrade. We'll look into that. So if they start cutting rates, bro, it's over. It is over. People are going to get squeezed. It's going much higher than that. And what I'm saying is we're in wave 2 FOMO. I believe this is wave 2 FOMO. Wave 1 was the squeeze over 4,200. That was the initial squeeze. Now we're back above the previous high. We're in wave 2 FOMO. You guys heard, if you're watching my newsletter, you've heard it. I've been calling for wave 2 FOMO. Now we're entering earnings season, where I think we start to bottom and we get wave 2 FOMO continuation. Inflation is lower, it's going lower. And if the Fed cuts rates, while the economy remains strong. That's it. That's wave through foam. Now we're going to all. I think this wave 2 takes us to all-time highs. Wave 3 is we go vertical. The markets go completely vertical. So she just said that. I'm sorry, I'm trying to read your comment. The judge just ruled for crypto. This guy, the judge. Where you from, Bon? Where you from, the hood? No, I'm just playing. The judge just ruled for crypto. All right, yeah, that's what's up. Where did I find that news at? Actually, let me jump over to. Okay, you guys can't see that. I'm gonna jump over to breaking news. Are we getting that? Crypto token sold to public may not be securities. Let's go. Let's go. Let's go. What does that mean for Bitcoin? Let me move over for Bitcoin. Bitcoin is starting to jump. Hey, by the way, the MicroStrategy. Oh my gosh, I wish I would have took that trade. We'll come back to this lady, to Fed Daily. Now, crypto is now ruled a not crypto, but obviously the market is looking strong. So we get some movement from Bitcoin. But look at this MicroStrategy. Where is it at? MicroStrategy just absolutely tearing it up. God, I'm so hurt. I got to stick with my conviction, but I was almost into this trade at 305. Actually, no, it was like 312 when it pulled back. Just got too scared. And I'm going to remain scared. I'm waiting for earnings to come out. I want to let the earnings clear. It might just, elevate, whatever. Either way, if that is true, and that's just the initial news. I'm sure that's not the real news. Like, there's still more. Somebody's going to come out and say, well, that doesn't mean crypto is free yet, blah, blah, blah. Judge, crypto token sold to public may not be securities. Wow. All of a sudden, BlackRock comes on the scene, files for a Bitcoin ETF, wants to tokenize everything, and now not everything's security. Skeptical. This should push Ethereum higher for sure, because we already know Bitcoin's not a security, right? We know that. Bitcoin dominance going down 100%. Look at 1-for-1 match. Crypto judge rules. Rule. I don't know if it actually rules. Actually, okay, you did say rules. I don't know the implications for that. The political system is tricky. Bitcoin dominance goes down. This might be the peak in Bitcoin dominance if that is true. Because that means altcoin season as we enter. When you think of investment cycles, think of the weather, right? Think of the weather here. When you think of crypto cycles, you got to think of the weather. Winter obviously is the downside. That is the bear market. That was inflation is peak. That is the Fed's hiking rates. We're in the winter. It's cold, right? Everybody's depressed. We're not spending money, blah, blah, blah. It's getting worse. And then after the winter, you start to enter spring. And I think that's where we're at. We're at spring right now. The economy is better than expected. Oh my God, we're exiting the winter. Okay. Crypto is up 100%. Bitcoin's up 100%. Oh, we're exiting the winter. We're starting to move higher. And I'm looking at Bitcoin dominance here. And the stock market is back above the 4,200 level. Oh my gosh. Winter is over. Winter is over. And they're still trying to convince you that we're in winter. Inflation just hit 0.1% on the PPI. We're at 3% flat, almost at 2.9. Actually, we were at 2.97 and the winter is here. It's getting worse. It's getting colder. The regional banks collapsed and the Fed stepped in, but winter's getting worse, huh? Triple B spreads, credit risk is non-existent, but we're getting worse, huh? Volatility was at 38, 30, 40, and now we're at 13, but winter's getting worse, huh? The dollar exploding, crushing all assets, is now breaking down, but winter's getting worse, huh? There's no market breadth. Okay, well, market breadth is moving up, but winter's getting worse, huh? We're exiting the winter is what I'm saying. We are exiting the winter and we're headed into spring, right? I think we're in spring right now. Okay. So what comes after spring? This is the real bull market. XRP just not rolled this. Let's look at XRP. That thing got to be exploding. People are partying right now. XRP, big move in XRP. Here comes altcoins. So we're entering crypto summer pretty soon. I think we are. With the dollar, look at the dollar collapsing beneath the big level, the 101, 100 level. That is the start of crypto summer. Mark my words. That is the start of crypto summer. Here comes debasement. Here comes currency debasement from China, from Japan. The US is not there yet, but we're still printing fiscal policy, right? We're still printing money from fiscal. So we're entering the crypto summer and we're going to explode. Like, this is a bull market. Somebody come on here and debate me, please. I want to hear something negative. There's too many positives. I want to hear somebody defeat my argument because it's non-existent. We're in the summer. Yes, I'm hyped up because everything is falling into place. Everything is starting to fall into place. Okay. BlackRock ETF, right? Not just Bitcoin, crypto, everything, all risk assets. You just have to pick the fastest horse. You got to pick the best, secure, fastest horse. Who's that going to be? It's not a crypto. Sorry if you're on that subject. Kevin Smith Jr. It's not a crypto. It's not a crypto. XRP is not a crypto. I really don't know what you're talking about, Kevin Smith Jr. Welcome to the channel, though. XRP just ruled not a security. That's pretty big for XRP. Am I an XRP fan? No, but that's, that's positive for crypto. XRP, why does this price action look so weird? Let me put this on the log scale. Looking at here on BlueTube, if you want to check it out, put this on the log. That looks too weird, right? So Bitcoin dominance coming down. Anyways, the whole point is the cycles, the way they work is you're in winter. That's the bear market. That was 2022. That's when everybody was scared. The market's going to collapse. We're going lower. Prepare for 2008 crash, non-existent. It's not happening. We're not seeing that, right? Then you enter into the spring, and that's where we're at. We're in the spring right now. We're headed for all-time highs by the end of the year. S&P 500, NASDAQ headed for all-time highs. And then after crypto, then after we get the spring, we hit summer. That's when we break the all-time highs. That's when the Fed cuts rates. That's when the QE cycle starts to turn back up. And that's going to be the most explosive cycle that we've seen in a long time because we have a lot of technological advances happening. We might actually gain GDP without population growth for the first time in 60 years. We might actually get that because of generative AI. That's why NVIDIA is up 1,000%, right? That's why Apple's up because of generative AI. That's why Meta keeps bidding up because of generative, because we might actually produce GDP and create more productivity with all this. That's why Tesla's about to explode, because you lower the cost of energy, you lower the cost to do business, and you create more GDP. We have not seen this since what, 1800s? We haven't seen this for a long time. So it's all coming together. And this is the beginning of the big 10-year cycle. And here it comes. Here it comes. That's why I'm so excited about this, because this is just the beginning. So we're entering the spring and we go into the summer. Now, hey, when the summer is over, maybe 2025, maybe when the cycle ends, then we enter the fall. And that's kind of where, it's going to come into place. Hey, Mind Growth. Hey, Mr. Fielder, when are we going to crash? I don't know, man. I don't know. I'm going to keep my eye on that. So what I do know is the ISM cycle has actually predicted the peak in Bitcoin twice. Okay, the ISM cycle. So when we get to fall and we start to enter the winter, stay with me. Stay onto the content. I am going to tell you what I think the market rolls over again. Do we get a big bear market? I don't know. But do we get a correction? Because we're tracking all these macro cycles, the dollar, bond yields, oil, the price of energy, the VIX, obviously everybody looks at that, the MOVE index, bond volatility, triple B spreads, credit risk. Who else do you know is tracking all this stuff, doing the technicals for you? So we're looking at peak, cash the top of the cycle like we did last year with crypto. We peaked, we sold the top of the cycle of crypto, right? Pretty much, not the very tip top, but Mana, $6, $5, Decentraland. Don't go buy that though. It's a trash development. And Ethereum 4K. Anyways, this is exciting. Everything's coming together now. And, you might hear otherwise, but that's where we're headed. We are in the spring and we're going higher. So this is XRP. We'll see if it continues to go up. Am I on the wrong exchange? I might be on the wrong exchange because this thing should be a little bigger. There it is. There's the XRP chart. Am I XRP bull? No, I am not. I am not advocating for XRP. But I think XRP goes higher in the cycle. Look at that wedge pattern. That is gigantic wedge pattern. All right, so we got some comments here before we finish with Fed Daily. It's not a crypto. Kevin Smith Jr. I don't even know what you guys are talking about. Buy US 30, buy QQQ. QQQ is going higher. I think it goes to all-time highs. When does the government cut rates? Well, the government, well, the Fed. When does the Fed cut rates? We don't know exactly, but at this point, you either get an economic crash and then the Fed cuts rates. That's not happening. We're not seeing that. There's no evidence that the economy is falling apart, right? There's no evidence for that. So when does the Fed cut rates? The Fed will cut rates when inflation drops significantly, and we're on track for that. We are at 3%. We are at 3% headline CPI, and we are headed for 2%. And PPI is about to go negative. Producer prices are about to go negative, right? CPI is about to go negative. Oh, super core shelter. Well, shelter is holding it up, and shelter is coming down. Real estate will continue to fall until probably 2024, right? We still have a lot of commercial real estate risks on the table. So when does the Fed cut rates? I think year end or early 2024. They can hold rates up here. But if we do get a collapse in inflation, and the key here is oil prices. If this crude oil right now, it is breaking out. If crude drops to the 50s or the 60s, and then we all of a sudden get inflation drop to 1.5, 2%, the Fed can cut rates and reaccelerate the economy. Now QE comes back because the inflation risks are gone. Remember, the reason this started, the reason the bear market even started in the first place is because inflation hit 40-year highs. So when that disappears, as inflation evaporates, strap your seatbelts. The markets are going much higher than this. People are saying it's the next Goliath, S-Smurf. S-Smurf? What the heck, bro? I don't even know what that is. Oh, it's some token? Sorry, I don't believe it. I don't believe it. S-Smurf. I mean, it probably explodes. It's probably some crypto coin, but it doesn't have sustainability, right? It doesn't bring real value to the space. Does it really bring value to the space? I don't think so. I don't think so. Which comment section you're reading? Oh, we're on BlueTube. I'm not going to say it on TikTok because TikTok right now. Look, TikTok. Look, you fools. They're afraid to lose. They're afraid to lose people over to the other platforms because they're not making money. TikTok is not making money. Nobody's staying. Like, too many people are waiting for 30-second, 5-second, 10 seconds, and advertisers don't want to be on TikTok for that. So I am somewhat, trying to stick on TikTok. But if you want to see the charts and the other comments, we are on BlueTube, or I'm trying to say it in another way that doesn't, shadow ban me, because they will shadow ban you. I've got banned multiple times and shadow banned for the stupid rules. So you want to check out the charts? We're on BlueTube. Plenty of opportunities. Maybe July 24th will take care of oil. Won't affect it. It's not a crypto. It's an OTC, smurftoken.com. Okay, I see what you're saying, Kevin Smith. Kevin Smith Jr. Where do you play football, bro? I used to play running back in the day. They are the Metaverse Group. They are a huge company, Web3-ish. Okay, maybe they have some, they might have some stuff there. I mean, I really don't know. I haven't looked into them. I don't know what they do. Smurf. Oops, what am I doing? See, back to all-time highs. Oh my goodness. Wow. Well, this is definitely an OTC company. Man, if you're going to throw money in this, you better throw like 1% of your net worth. Don't get too freaky. This thing could drop 50% in a couple days, couple weeks, but 15% to the highs. Why mess with Smurf when you can just buy Chainlink? I'm just playing, but I'm not. Why mess with Smurf going up 1,000%? Uncertainty could collapse on any earnings report. Do they even have earnings? I'm not sure. Hey, well, thanks for the call out, bro. But thanks for the call out. Smurf F. I'm not supporting that token. I mean, that company, OTC, that's just, there's too many things that go wrong. But if you want to look into Smurf, go check it out by Kevin Smith Jr. I believe you, Kevin Smith. ZM making money. JD looks good. Yeah, ZM starting to move now, bro. ZM is starting to move. Look at that support. Look at that resistance for ZM. Right, we're long calls right now. ZM, we get above 72 and hold. big upside move. Everybody still uses Zoom. They have a lot of demand. Earnings are going to be interesting. We'll see how that plays out. Hey, why did the earnings disappear? Did I do something? I didn't mean to get it. Also, we got Roku supporting that level. Let's go. No head and shoulders breakdown. ZM starting to push higher finally. Tesla. Let's go. Let's go Tesla. Supporting PDC. AMD getting back above, breaking the trend. We're in a bull market. We're in a bull market. They post earnings every day. Kevin Smith, you got to know what happens to Luna. Yeah, I don't know much about that, what you called out Kevin Smith Jr., so I can't really comment on it. Initially, my gut is like, this is a trash company. They're just trying to play crypto stuff. Usually that's the case 99% of the time. But again, you probably know more than I do when it comes to that company, whatever they do. But my gut feeling is it's trash. Maybe I'm wrong. Maybe I'm wrong, bro. Prove us wrong. Prove us wrong. But it's just my gut feeling. And that's usually the case with a lot of crypto stuff. Most cryptos are trash. Solana, are you kidding me? Solana just coming out with freaking mobile phones, all this crap. All these companies coming out with crap. They're just coming out to get the money, bro. They don't provide real value to the space. My question is to you, Junior, Mr. Kevin Smith Jr. Everything did. If Bitcoin goes up, everything does. Yeah, 100%. I agree with you, Kevin Smith Jr. What does that company do? Let me test you. Let's see if you know what you're talking about at all, Kevin Smith Jr. What the hell? I don't know if I can say that on here. Excuse my French. That's not even French. What do they do? What is it? Token, something's token, whatever you said, something token. What do they actually do? What is their use case, right? The OTC. What is their use case? Let's see if you know what you're talking about. See if you can convince anybody really quick. I know there's not a whole lot of characters that you can actually apply on TikTok, but what is the use case, bro? What is the use case for that? But yeah, when Bitcoin goes up, everything goes up. But everything that's legit, a lot of coins will never make it back to the all-time highs. They get stuck. There's a lot of coins that are still stuck very low. Anyways, Bitcoin pressing that 31,000 level. That was a big move. Okay. That was nice. I like it. So Mary Daly, what is she talking about here? Also, see what else we got. We got a lot of stuff in the pipeline. Hey, and also too, if you guys have not always, go follow my newsletter. Go check out the newsletter. I can't even say, can I even say blink? I got to say blink in the bio. Blink in the bio. Because again, shadow banning for certain things, getting shadow banned. But go check out the newsletter, support the channel, like, subscribe, and support the channel. Let's see, what are we looking for? No. Oh, no, not looking for that. All right, well, hey, any Q&A before we jump out of here? Any Q&A? Got to prepare for the macro report. Any Q&A will be live tomorrow, again, 10 a.m. Eastern time. And we'll go over we'll check out the bank. I think we have earnings before the market opens. Earnings before the market opens tomorrow. Things we don't understand yet. All right, let's see. Kevin Smith Jr. was saying that they own a ton of real estate in Decentraland where Louis Vuitton, Adidas, and huge companies are. Okay, I see what you're saying. So Sandbox and Decentraland, very risky because Decentraland as a Decentraland, Decentraland in general, they're not doing so well, bro. They're not doing so well. Their development team is suffering. There might be they're completely centralized. They're so centralized also. There's a lot of risks. My brother's a computer scientist. He's in computer science. He's an engineer, and he explains all these things to me. We were very bullish on Decentraland, by the way, in the metaverse, but there's a lot of things under the pipeline that are really hard to understand, that change day to day. So they're building their land in the metaverse. Sounds bullish. Sounds bullish if the metaverse is real, right? If that metaverse is real, if it does, actually convert. But yeah, we understand Web 2-ish, like Snapchat, Instagram. We're dumb. Just wait. Kevin Smith Jr. Yeah, bro. I understand. I've written about Web 3. I get Web 3. I get the metaverse. I get all that. But there's certain risks to the metaverse that may not materialize because it's so centralized and because it can be corrupted so easily. And really, there's not a whole lot of adoption right now in the metaverse. There's not a whole lot of adoption. Maybe it comes later. Maybe it comes later. Maybe price needs to go up. But Decentraland in general doesn't have a whole lot of adoption. The adoption rate is falling. We might just be extra early. We might be super early. And I'm just saying, hey, make sure you keep your eyes out. CF, how does it look? It's because it's new, my man. We when internet was an idea, it was super sketchy too. Yeah, bro, I know. Like I said, I wrote about Web3. You ain't gotta educate me on Web3 and how new it is. Trust me. I understand Web3 to some degree. My thing was, what does it solve for, right? You got to answer that question. What does it solve for? You said things we don't understand. So that tells me you don't understand yet. And I'm not trying to crap on you. I'm just saying, it's better that you know how to explain that to people for the opportunity, which is what does it solve for? Because at the end of the day, they need to solve for something or they go to zero or they collapse. They need to solve some type of issue. They need to solve an issue. Now you have Apple coming out with their headset and Facebook and blah, blah, blah. I'm a big believer of tokenization. I'm a big believer of a decentralized world also to some degree, but it's a lot more complicated than we initially think, right? We got to be realistic about how these things actually work. And we need user adoption at the end of the day. For decentralized, we need user adoption, bro. We need user adoption, but I'm bullish. Yeah, I'm bullish too. We need Ethereum to perform at the end of the day. We need Ethereum to not make a mistake because they're really providing the infrastructure to build these Web3s, these metaverses. So let's keep up with Vitalik and Ethereum, right? All right. So if we ain't got any other questions, I'm going to zone out of here. Appreciate you guys jumping in. Okay. For today's cast again. I am hoping to debate a bearish macro guy. I'll let you guys know when that does happen, when we do schedule it. I'm just waiting for him to let me know what time, and I'm going to debate him. Some of you that were on here yesterday, you heard about it, and it'll be a friendly debate. I'm not trying to crap on nobody. I think he's bullish on crypto, so I'll give him that. But no, smart dude. So we'll see if that turns out. I will let you guys know when that comes on. We'll either do it on YouTube or we'll do it on TikTok. Not sure yet. Yeah, so just stay tuned for that. Let's see, what exit music do I want today? It's a good one, huh? ETH to BTC need to go higher. Yeah. So, hey, big news today. Keep in mind this, right? Before we exit out. The US dollar is breaking down. The dollar is starting to break. That's Discord. The dollar's starting to break down. That's a risk on signal. Bond yields are starting to peak because inflation is making a meaningful drop, right? And so the people argue to you, no, core inflation is still elevated, but core inflation, 30% of it is shelter. Shelter is coming down. It is starting to roll over, and it is the most lagging of all the CPI is shelter inflation. That's coming down. And so we're going to see that core collapse. We're going to see that core eventually collapse. Services are hanging in there, but they're not accelerating. They're just hanging in there. We're in a bull market, man. Keep your eye on the dollar. The dollar continues to make new lows. XRP just got deemed as not a security. And was it not a security? Maybe I misspoke there. But we're in a bull market, man. We are shifting from the winter to the spring, right? And then from the spring, we're going to head into the summer. And that's when the real bull market, there's no arguing at that point. We're at all-time highs. So keep your eye on that. Well, hey, Kevin Smith, maybe you're a lucky token, bro. You must be a token. You must be a lucky guy. Thanks for the good luck. All right, guys, we'll catch you tomorrow morning, 10 a.m. for another macro report. And we got bank earnings tomorrow. Let's see what happens. Oh shoot, I almost forgot. Stay blessed. Stay blessed. Oh man, we got some bots in here. Forgot to tell you guys, stay blessed and get your exercise. Okay, get your exercise, eat a clean diet, get your meditation, whatever it is you got to do. I always want to say that. Make sure you guys stay blessed. Christ is King. Let's go.